Welcome to another Disruptive Discourse video. So this past few weeks has seen a lot of turbulence in the market, with the Nasdaq dropping 12% as of Friday the 5th of March, which technically is a correction, but not quite a bear market, which would require a 20% decline. If I had to share any wise words, it will be this: you should invest the most into your highest conviction stocks. The best rule of thumb for determining what your highest conviction stock should be is the more informed you are about a stock and what its future potential for growth is, the more your conviction and confidence should be for that stock. So that should be your focus. Of course, the less you know about the stock, then you should not invest as much into it until you have gained sufficient knowledge about it to give you the confidence to invest. I hope that helps you for what it's worth. And of course, this is why I do these videos, to give you as much knowledge as I can about innovative companies. Hopefully in the future, I'll be able to provide even more knowledge in additional formats that you can all find useful. So watch this space and make sure you subscribe to the channel if you haven't done so already. Also, there are timestamps in the description box below, so please feel free to use those to navigate to the part of the video you want to see. So without any further ado, let's get to the 5 stocks that I'll be rating in this video, and they are part of the new stocks purchased by Ark Invest in January 2021. I'll be rating them according to their future growth potential, with the least growth potential rated number 5 and the highest growth potential at number 1, but in alphabetical order. The 5 stocks are Elbit Systems, Experience Investment Corp, Lockheed Martin, Teledyne Technologies, and Synopsys Inc. At number 5 is Teledyne Technologies Inc., ticker symbol NYSETDY. The CEO is Robert Mehrabian. Ark Invest purchased $34.8 million worth of shares on the 11th, 12th, 14th, and 15th of January. Teledyne Technologies is a company that makes components and instruments for a wide array of sectors. They cover the traditional industrial sectors, including healthcare, aerospace, and defense. Their main focus is on imaging, including visual imaging, infrared, and sonar imaging, as well as UV, X-ray, and LiDAR imaging technologies. They also build components and electronics for the commercial and defense sectors. They're also well known for having built one of the components used on the Perseverance robot that recently touched down on Mars. All in all, this is a robust company with a vast array of experience in developing and making indispensable components for many industries and sectors around the world. The company's revenue grew from $2.6 billion in 2017 to $3.09 billion in 2020, which gives it a CAGR of 5.92%. No doubt this is a decent growth rate, but it certainly isn't a high growth stock, and that is why this is at number 5 of this list. At number 4 is Lockheed Martin, ticker symbol NYSELMT. The CEO is Jim Taiclet. Ark Invest purchased $33.57 million worth of stocks on January 11th and 14th. Lockheed Martin is arguably the largest defense, security, and aerospace company in the world. It is headquartered in Maryland, United States. Lockheed Martin covers a wide range of product segments, including land, air, and sea advanced systems. They're developing cutting-edge technology in hypersonics weapons, which are missiles that travel faster than the speed of sound, and directed energy weapons, which are laser beams that travel at the speed of light. In addition, the company is also working on autonomous and unmanned vehicles with integrated AI technologies. It is safe to say that the company is at the very forefront of advanced weaponry. As for Lockheed Martin's revenue, in 2017, the company generated $49.96 billion, and this rose to $65.4 billion in 2020. This gives it a CAGR of 9.39%. This is a very respectable growth rate for a large cap company, especially given the size of the revenue it generates, which is the largest within the industry that it operates in. At number 3 is Elbit Systems, ticker symbol NASDAQ ESLT. The CEO is Bezhalel Maklis. Ark Invest purchased $2.1 million worth of shares on January 11 to 15. Elbit Systems is a company founded and headquartered in Israel. It's a company that specializes in international defense electronics. Its biggest competitor in that field is perhaps Lockheed Martin. Elbit covers a wide range of product sectors, and they make state-of-the-art technologies in the following areas: special missions aircrafts, electro-optics, military aviation, unmanned aircraft systems, land systems, naval systems, homeland security, training and simulation. Elbit has one of the most advanced unmanned aircraft systems in the world, and they range from small surveillance aircrafts to large, highly sophisticated and complex aircrafts like the Hermes 900. In fact, they recently won a contract to supply $300 million worth of the Hermes 900 to a country in Asia. As for Elbit's revenue, in 2016, the company generated $3.26 billion, and this rose to $4.51 billion in 2019. This gives it a CAGR of 11.43%. I honestly wouldn't be surprised if the company maintains this very respectable growth rates for years to come. It certainly deserves its number 3 spot on this list. At number 2 is Synopsys Inc., ticker symbol NASDAQ SNPS. There are 2 CEOs for the company. First is Art DeGoes and the second is Chi-Fun Chan. Ark Invest purchased $6.8 million worth of the company's shares on January 15. The recent worldwide shortage of semiconductor chips is a clear harbinger for the huge explosion in growth for this sector. As our technologies become more advanced and gain more widespread adoption, so too would the demand for semiconductor chips and the components that complement them. Companies like Synopsys stand to gain a lot from this because Synopsys is at the heart of this fast-growing sector. Synopsys is engaged in the production of solutions that help with the design, verification, and engineering of silicon chips. They are an indispensable part of this industry, and as the industry grows, so would they. The company's revenue grew from $2.72 billion in 2017 to $3.69 billion in 2020, giving it a CAGR of 10.7%. I can definitely see this growth rate accelerate in the years to come, and would certainly put this one down as a dark horse amongst this list. Taking the number 1 spot is Experience Investment Corp, ticker symbol NASDAQ EXPC. The CEO is Eric L. Alfeld. Ark Invest purchased $0.94 million worth of the stock on January 11, 13 and 15. In fact, Experience Investment Corp is a SPAC, and it acquired Blade Urban Air Mobility Inc. Blade's CEO is Rob Wiesenthal. Experience Investment Corp, as I said, is a SPAC, which stands for Special Purpose Acquisition Company. It entered into an agreement in December 2020 to merge with Blade Urban Air Mobility Inc. Blade is the Uber for short-distance aviation. In other words, the company provides short flights between urban city centers and the areas around them. They use conventional helicopters and seaplanes as the key mode of transportation. Passengers can book these short flights on a private basis or as a shared commute. They do pickups and drop-offs from either an airport or one of their dedicated heliports. The bookings are done through the company's mobile app, and once booked, passengers get collected and dropped off to the helipad where they get flown to the destination of choice. The idea is that this drastically cuts down the travel time, especially given the very congested city roads. The company currently operates in New York, Los Angeles, and the surrounding areas. The company's future is to move into the use of eVTOLs, which are electric vertical takeoff and landing aircrafts. They're aiming to be one of the first companies to offer this as a service, and they anticipate that this could be a reality by 2025. They're also banking on the fact that eVTOLs are quiet. This will unlock more locations by removing restrictions to fly over more urban areas and cities. As for its revenue, the company states that it generated $33 million in 2019 and is estimating that it will grow its revenue to $402 million by 2024, giving it a 5-year CAGR of 64.87%. The business model, with the exception of the Medi-Mobility service, caters to a high-end luxury market and would have its limitations in scaling significantly. I would suggest that perhaps half of that growth rate is more realistic, but of course I could be wrong. Having said all that, it still puts the company comfortably at the #1 spots for this week's list. So that concludes this week's video. Thanks as always for tuning into the channel, and if you're new, don't forget to subscribe. Thanks once again, and I'll see you all in the next video.